Hello, you're listening to Ready, Set, Go Real Estate Investing Podcast, presented by Brandon Elliott. This show will be going over all aspects of real estate investing and is intended to educate, motivate, and prepare you to take action on your first or next real estate investment. For more information, please visit BrandonElliottInvestments.com. Thank you for listening and enjoy.
All right, welcome back everyone to Ready, Set, Go Real Estate Investing Podcast. I am your host, Mr. Brandon Elliott. I am super excited today because we have a special guest that really went from the real estate investing side to being the bank. His experience was not just a couple rental properties. He had 35 rentals at one point, 10 flips. He was an experienced real estate investor, right? And we could talk about that all day. But he realized that, hey, I don't want to be doing this active work. I'm not as passionate about it, and realize the end goal is really to become the bank. And that's what I really try to promote and show you guys each and every day is identifying yourself of like how the banks are thinking, flip the script, get all the capital in the world that you deserve and you're entitled to. Once you get those funds, then put it to work. And this gentleman has done exactly that. He's got some crazy stories behind it. You know, one of their biggest, funding that they've done with hard money and private money has been a $22 million flip lending out on such, investments like that. So you guys could potentially utilize his services as well. He's local in the Southern California region. So really excited just to be able to dive in with this gentleman. And yeah, I definitely want to encourage you guys to reach out to him afterwards and really get the missing pieces put together. So without further ado, Byron, what is up, my friend? How are you today?
Good, man. How are you? Good morning. Thanks for having me on.
Yeah, man. Yeah, we're excited to have you. So do me a favor, anybody out there that doesn't know who you are, a little bit more about your story, do you mind just diving into it and sharing with us in the audience?
Yeah, of course. So my name is Byron Enriquez, Southern California native. Been in the finance world now for, I want to say going on 20 years.
Yeah.
I know I look like I'm still 20, 21.
Baby.
Yeah, the baby face. But yeah, I've been in the business for a little bit over 20 years in all aspects of finance. Got started in my career doing foreign exchange trading, actually, right out of college. I was a Forex trader,
Nice.
Trading securities, and just being in the banking side of it. Had a desire, kind of family push, if you will. I had a lot of family in real estate. They encouraged me to get into the real estate field, which I did. Being as an agent, this is like my early 20s. Realized really quick that I was not meant to be a realtor. All hands down to that profession. It's not me, and I couldn't do it. And I had right.
You don't want to show properties each and every day, right?
That literally wasn't. I'm a numbers guy. First of all, my social aspect of it is a little bit lacking. I'm more of a introvert. Numbers, that's just what I do.
Yeah.
I had a finance background, try to go out there and, hey, let me show you this house. And I was not what I was called to do. Let's just put it that way.
Yeah.
But
you have to identify your calling from the beginning, right? Like you don't want to go down the path that's not satisfying you.
But it's funny. I actually had somebody have to kick me in the butt to say that. I had a mentor, this older gentleman that I used to have coffee with every couple mornings at a coffee shop. And he was in commercial real estate, and he kind of looked at me one day and he's like, "Why are you selling houses?" He goes, "You have a finance background. You're a banker. You should go into the mortgage side." And it clicked, and I did. Started going into started doing mortgage, and that's where my career really started. Was just doing sales and doing mortgages. This was, like I said, 20 years ago, right? Early 01, 02, give or take, and we did well, right? We did well. Got to the point where I was maybe 24, 25, and I started my own mortgage company. Started doing really well, had about 150 employees, killing it. I mean, doing some great stuff. And that's when I started doing some real estate investing. And it all started out for deals that kind of fell in our lap, right? As owning a mortgage company, you get, transactions that kind of come up all the time, which we did. I had two business partners and we started buying properties and some rentals, some flips. So we did a little bit of everything, right? It got to a point where we owned about 35 rentals at any given time. And then I had to hire a property manager, I had to hire a landscape. And it was turning into this whole other business, taking away from what we were doing. And this was at the peak of the mortgage boom, and we were busy, like really busy.
Yeah.
So yeah, we kind of did a little bit of everything. But, like I tell people, my story has that roller coaster effect that a lot of people in this business do have as well.
Yeah.
When 08, 09 hit and the market kind of crashed and the mortgage side of it, we were, like I said, we were booming. We were doing some great things, great numbers out here in Southern California, doing, I don't know, somewhere along the lines of like, 25, 30, $40 million in business a month. And then all of a sudden, doing these deals and the mortgage business imploded and all our sources that we sold on the secondary market went out of business. And then all of a sudden I owed my bank $25 million.
Yeah. Something light, right? Something really,
so it was, so I resonated. I've heard, a few of your episodes, when you talk about, having to work your way up and having to, struggling and, trying to find your niche and really being able to pull yourself back up. And I definitely resonated with that episode of yours, because that's what I had to do.
I love it. And I think like most entrepreneurs, like nothing comes that's good in life easily, right? Like whoever is selling that pipe dream of like, wow, you're going to be a multimillionaire overnight. Yes, that it's happened to very few people, that's the exception. It's not the rule. There's going to be adversity, long story short. And I'm really excited to hear more about your story. I know you're first generation immigrant as well. So family came over here and that just speaks so much volume as well. I feel like people that come from different countries, man, their work ethic is like next level. And then the businesses start and then like the compound behind that and not relying on the government or anything else. Like a lot of people that have just been born here, unfortunately, get used to, the handouts, right? So
no, definitely. There's a lot of pride, and there's a lot of love for the country and for the opportunities that we've given, my parents, coming over, and seeing them work hard, really, really, really bust their asses, to make a better life for us, kids and seeing that, right. And, taking that into like, look, I got to make my family proud. But then there's also something within the immigrant community where it's like, you go and you, as myself, an entrepreneur, you go and start a business and you get some pushback because they're always like, well, why don't you go get a real job? Why don't, you're smarter. Why did you leave the bank you were at? You were a foreign exchange trader. You were doing very well. Why do you go struggle to not knowing where your next paycheck is coming from?
Sure. Well, that's that old way of thinking that like, they were raised on,
yes,
like go to school, get like a banker job, or like, work for the guy that owns the bank, not actually be the guy to own the bank. They didn't even see the possibilities, right?
No, I know. I remember when I got my first job, as a banker, and my family was just proud. They were like, oh, wow, you made it,
Yeah.
And then, a year later, I'm like, yeah, I'm going to go on my own. And they're like, what? Why would you do that? But yes, it's seeing that, look, it's, I don't want to be the guy working for somebody. I want to be the guy that people are working for.
Yes, love it. And you build up something incredible. I mean, 100 plus employees, you're saying 40 million per month. If you don't mind me asking, like roughly, what were the actual like numbers coming in that were actually like profitable out of the crazy numbers like that?
Wow. Those were some crazy times.
Yeah.
I think at our peak, like I said, and I had two business partners, so it's all, diluted. So it's three ways. But there's months we cleared in excess of each $100,000 revenue wise, each. And that's paying salaries, paying overhead, paying our rental properties. Yeah. So no, it was an interesting time, definitely an interesting time.
I love it. So let's talk about the investing side for a second. Obviously, you did the Forex trading, you did the agent side, you did the banking side. You realize, I'm not as passionate about certain things. The banking, obviously, you started falling in love with, but you're like, I took what I needed from these guys. Now I'm going to start my own thing. I'm curious about the investing side. As these opportunities were coming in, you're cherry picking the best ones or taking those opportunities, start stacking up too many. What were the things that really started being the light bulb moments of like, wow, this is getting too overwhelming. The systems aren't in place or whatever it may be that I don't want to do the investing side anymore. I'd rather be the bank.
Well, yeah, I guess that's interesting. So like I said, it wasn't my original business plan, right? I'm a big planner and like to met my metrics and my data and like to follow my path. I'm a numbers guy, and then a property. Yeah. Right. Numbers don't lie. So, a property fell in our lap, and so I bought it, said, you know what, I'm going to rent it out. So we started doing that, and then another property came up and was like, oh, this one needs some, needs 50 grand of rehab, so I'm like, all right, let's do it. We were able to flip it and made a decent amount of money. Bought another property in Studio City. And again, we made some money on it. And I was like, okay, and my two business partners were like, well, we should really be focused on this. And I focused more on the mortgage side of it, keeping the company going. And they kept bringing deals and I found a way to finance them. And that's kind of how I cut my teeth in that side of it, learning how to leverage, other people's money to be able to finance real estate, right? And we did that. We did it a smart way. This is way before these fix and flip loans were around. This was way before any of that was around. So we self-financed a lot. We had some warehouse lines and we had some ability to do some stuff for ourselves. But next thing I know, I turn around and, like I said, we own 32 to 35 rentals. I forgot what it was. And me being the numbers guy, I was still trying to manage collecting rent payments, do all the stuff that I shouldn't be doing, right? I was kind of diluting my time. So we hired a property manager and I said, all right, let's do this. I hired a full-time handyman. We hired a full-time realtor to kind of list the properties for rent and did this. And next thing I knew, I had this whole other venture, that was there.
That your partners are putting on you to manage.
And that's exactly it. Yes. It's in the business. I'm the guy that gets things done. So we had, these guys kept bringing out ideas and opportunities, which were great, right? Because we're making money off of them. Yeah. But I just felt I was stretching myself too thin. Sure. And the truth is, we actually probably would have kept going, except that the other two business partners had a falling out, not a nice one. So we all decided to, sell everything off, close the business and walk away. So it was more of a personal thing where all that happened to be coincidentally while the mortgage market was crashing, 08, 09, and then I think that had a lot of effect on the personal stuff that was happening between both of those gentlemen. All of a sudden getting the $25 million bill does that to people, right?
Yeah, it starts the tensions up there at that point.
Definitely.
So you're in the LA County area? Or?
Yeah, Southern California. So we're in Agoura Hills, Calabasas area. That's where
cool.
Yes.
Love it. And I love that area. Very nice. So let's talk about the partnership, how that dissolved. And you don't need to go too far into detail or anything. Just curious for some takeaways for some of the listeners that might be thinking about starting partnerships. They can be an amazing blessing and vice versa. They can be a nightmare. And really making sure you're setting yourself up for success up front in the beginning can help a lot of negotiating where that's going to go, like which side you're going to take here. I've been on both sides, great partnerships, other ones that screwed me over. So yours was a 3-man team.
It started as 2, and then we took on a third partner when we merged with another company that we bought.
Okay.
So we kept one of the owners. And here's what I tell people. Look, I think partnerships are great, right? Because if you can surround yourself with people that can complement you and bring on other things that you lack, that forms a great partnership, right? But I think, and this is my takeaway, and what I'll share with your viewers is this: to create a successful partnership, you need to know the intentions. You need to know how the other person is going to react to adversity, being in difficult situations.
Yes.
A big thing is also work ethic. If I'm the guy that works, 10 hours a day, but the other partner decides to work 3 hours a day, there's going to be a rift, as in, look, if we're equal partners, but I'm doing this and you're playing golf all day, how does that work? Not saying that there's something wrong with either way to do it, but as long as you have that conversation ahead of time and you're aware, look, here's my expectations is that I'm going to hire somebody to do this, or I'm going to do it myself. Right. And if you have that clarity going into the situation, that sets the groundwork for a proper partnership.
That's so good. I think just identifying what roles are going to be played from each individual. And like you mentioned, for your first tip really is having each other complement whatever the other individual is lacking. Like you don't both want to be experts, or not just experts, but like really enjoy doing the one thing in the business together. Like that would be horrible because there's so many other areas of the business that's going to lack that,
Right.
It just wouldn't make sense for that type of partnership. But if one person is excellent in sales, the other person is excellent in lead generation or whatever, and they both enjoy those things drastically, then just having those expectations up front of like, cool, what are you responsible for? And then if out of my earnings of, my percentage, I delegate all of it and I systemize it and I manage those individuals and I work, an hour a week. Are you going to be okay with that? Like it's, if the business is functioning fine and I'm responsible and it's coming out of my portion of profits, then by all means, I think just having that clarity and understanding up front and having that full transparency, that's what really separates the craziness and bad relationships and the good relationships, right?
Yeah, there's that. And then the second thing that I always tell people, because I get, part of, one of the things that we do now is, we obviously lend to investors who are investing in property. But one of the things that I do is that I can give some advice or kind of help people along the way, because I've been there and I've done it, right? I've flipped some properties, I've owned rentals, I've structured deals, and I've done, but one of the things that I always talk to people about is also, when they're telling me, oh, look, I'm bringing on a partner because I need, some gap financing, or we're looking for this, or whatever the case is, right? I always say, and they're like, well, yeah, it's a buddy from high school and he's going to do this. And I'm like, that's all fine and dandy. That's great. Yeah. Put it in writing. Yeah. It's no matter how level of friendship you have, money corrupts situations. Yeah. When all of a sudden it's like, hey guys, we're short 20 grand, everybody pony up. Or, hey, we made a little bit extra, but I put in extra work, or whatever the case is. It's, put it all in writing. And I've had these conversations with people that, I've started other partnerships for other businesses at times, or other ventures, and I would say, hey guys, look, I know we're friends and I want to keep it that way. So before we go down the road, let's set the parameters to our partnership so that there is no miscommunication down the road and nothing's ever going to happen. Right. And as long as you have that difficult conversation up front, it prevents even harder conversations later.
That's so good. Yeah, I think you may have the most amazing relationship with your best friend until you work with each other, or until you live with each other, roommates, stuff like that. There's just new levels of adversity, or just certain things you guys start disagreeing on, or button heads. So, making sure that you have it in writing, you identify what you guys are responsible for, and kind of really seeing, you don't need to jump into a relationship very quickly, but over time, identify how do they really react when all hell breaks loose? Are they going to be nervous? Are they going to be freaking out? Are they cool, calm, and collected and, think before they act? Or are they irrational and make crazy decisions on the fly that could sink a ship? So being aware of all these things can really make or break a relationship. And over time, you got, it didn't work out, unfortunately. Have you guys rekindled anything or anything in the future, or you just went your own separate way? Those two were knuckleheads and did their own thing.
Yeah. So those two were knuckleheads. I've never had any issues with either one of them. And I've stayed in contact with.
It's a good position to be in,
Well, yes and no. Yes. In the fact that I, no animosity, no. But yet I was the peacemaker for a lot of situations, right? So that's not good. But actually everybody went in different directions. The other two completely got out of the business, so I'm I still talk to one of them, periodically. And he's like, why are you still doing that? And just kind of just joking around. He's like, you're still in the business. And I'm like, this is what I know. And this is what I love, and I've done pretty well at it. So
I love that. Yeah, you're not a quitter. That's what you got to tell them. Sorry, bro, I'm not a quitter. When shit hits the fan, I keep pushing through and get it done.
That's it. That's exactly it.
So for any of the listeners, if they don't know, they're a real estate investor, whatever it may be, what type of products, lending are you mostly focusing on? Is there a certain niche that you like, that's your bread and butter, or very diverse in all areas of private money lending, hard money lending?
Yeah. So, we're very diverse in the fact that we can do anything, right? We can do all of it, but our focus is on the private money. I don't like the word hard money, but it's the private money world. The reason I say I don't like hard money is because we've built something a little bit different than your traditional hard money source. We're in the sense that we're professional, right? We're going to give you, all our stuff goes through law firms, legal, loan docs are drawn by lawyers. Our servicing department is websites you can make payments on. You get your statements every month. We're not, back in the days when I started in the business, the hard money guys, if you missed a payment, you had a knock on your door, right? That's just, it was status. It was, and it has a bad connotation, I think. But me coming from the corporate banking world, I wanted to build something that, gave some flexibility on lending parameters, but it gave us still a sense of professionalism, a state of, look, you're dealing with a real legitimate company. You're dealing with an organization that's going to treat you properly, that's going to has your security, your privacy in mind, all of the stuff that you would get from one of the big banks. We do it at a smaller scale. Yeah. We're a lot more mobile. We're more nimble. We can move around and identify market changes. When COVID happened and, a lot of people stopped lending, we made a quick pivot and we tripled our business in the next 2 months, right? Because we were able to identify some market changes and be able to follow up with that.
Yeah.
But yeah, so in the private money world, we focus on obviously investors, right? That's our bread and butter. We can do the fix and flip loans like everybody else does, 80% purchase price, 100% rehab dollars. We can do all that stuff. But our niche, I think, is more along the lines of the loans that a lot of people won't do. Like you mentioned, the super high end, $20 million loans. We have no limits on our budgets. Those are few and far between. But right now, actually this week, we're closing 2, potentially 3, $5 million plus deals. Properties are $8 million, so we can do a lot of the high end stuff that a lot of people shy away from. We can do ground up construction. We can do developments. If you're looking to develop, buy some land and put up 15 apartment buildings or 15 condos, we can do that. Hospitality, hotels, restaurants, retirement communities, retirement homes, you name it. We have a source, and my partnerships with different family offices that we have can structure all those deals.
Love it. So you're doing rentals as well, and long-term, short-term, Airbnb.
We can do long-term.
Mobile home parks.
We can do mobile home parks. Yeah, we do long-term, and we can. Yeah, we exactly.
Do it all, man. I love that.
We do. So that's what we try to pride ourselves on is having different sources that I pull the money from different places where we can put together some good stuff. One of the things that we do right now, which I know maybe not sound like a great thing, but in the private money, hard money world, it is. We can do bridge loans up to 80% purchase price on a purchase, right? 80% loan to value with 20% down. I mean, normally you're looking at 30, 35% is what most hard money guys are looking for. I can close a purchase with 20% down in 5 days. And we do them all the time, right? And what that does is, I know one of the things you were talking about in one of your episodes was, how to present your offers to be able to get them accepted in this market, right? It's a difficult market where everybody's making offers.
Yeah.
So most of my clients know that I can close in 5 days. They're offering no contingencies, and then to make an all cash offer.
Yeah.
Because I have funds that I'll provide for them. We can close we close in 5 days. I did a deal last month and the month before. I closed it in 48 hours, start to finish.
Yeah. I love that. So talk to me, which areas are you focusing on? Do you guys do nationwide. Or is it just nationwide? Okay. Love that. Yeah. So
we do like to stay away from, I say this to people, and sometimes it's like, well, you're from California. We like to stay away from the rural areas for lending purposes, just because we don't know those markets very well. It's hard to get appraisals. It's hard to get any services that we need. It's very difficult for us because we are in California, but sometimes I tell people, hey, that property in Alabama, we consider that rural. And they're like, no, it's not. This is where I grew up. This is my hometown. It's not rural. Yeah. And they kind of get offended.
There's about 300 people there.
Exactly.
It's like, dang, man. It's like,
and I'm like, they're like, yeah,
it's going to take a week. It's going to take like 2 weeks to get like basic paperwork back. And, people move a little bit slower in certain areas. Yeah. I hear you. But California, we got patient. We're like, we need this now. Let's go.
That's it. It's exactly it. Yeah.
Yeah. I love it. Cool. So I want to dive into, the typical learning curves that you see with some investors. But before that, do you mind just breaking down like that $22 million flip of like who the investor or like how his situation came into play, why they chose you instead of other people, and just what the process looked like?
Yeah. So that was an interesting transaction. So that was a property up in Hollywood Hills.
Say the least. Very interesting.
Yeah, it is. You know what? And those are the deals that to me, they're fun because I still have a passion for the real estate. I still have a passion for the properties. I love walking properties, especially properties like that. I've walked some amazing, amazing properties. But this was an interesting one. So this investor, full-time investor, I mean, they do, I won't say their names, but they're very well known. They do a ton of property in Beverly Hills, Malibu, Hollywood Hills. That's their market, right? They just do the high, super, super high end stuff.
Yeah.
He bought, I think it was like the original price. It was like $6.5 million home in Hollywood Hills, which was new construction. It had just been built, and he bulldozed it.
He demoed the whole thing, huh?
Yeah, just $6.5 million property, demoed it. And then
like, I don't like the design. I want to build something better. Yeah.
Well, yeah, that's exactly what it was. And then he spent the next, I want to say almost 3 years building this amazing property, 20,000 square feet, overlooking the canyon, views of downtown LA, views of the ocean. I mean, you name it, had the views. I mean, this house had, things brought in from Italy, designer wallpaper, the designer stuff. Like when I speak designer, not the stuff that you find at Home Depot, stuff that it's like, oh, I didn't know, it's Chanel
Louis Vuitton made,
Yeah, I was like, I didn't know Louis Vuitton made wallpaper. They do. And it's like stuff like that. It was just, decked out.
You gotta have the right connects for that. That's connections. Yeah.
Literally decked out. And then so, what we do a lot of is recapitalized loans, right? So he obviously self-funded some of it, but had some construction loans to build the house, was into it for, I don't remember what the numbers were, by the time all this was done, he was into it for about $19-20 million that he had spent already on the property, including the acquisition. Loans were coming due, needs to recap because, these hard money loans or however he had it, or two-year loans, 3-year loans, whatever the case is. So I was lucky to come in when the property was pretty much done. It was 90% done, needed some landscaping, needed some minor stuff to be finished. So we helped them recap the loans and get the rest of the money to finish and then money to market the property. But, deals like that, it's one of the things the guidance that I always tell people is knowing your exit strategy, because I'm going to call you on that. That's my biggest thing when I analyze a deal like that. It's what is the property worth when you're done realistically? Right. And in a situation like this gentleman was like, oh, that property's worth $50 million. It's going to be worth $50 million. Right. We did our numbers. We looked at it and I'm like, it's not $50 million.
Yeah. I know you want it to be, but it's not.
I know you want it to be. Yeah. And he was like, okay, we'll settle. He goes, 42.
Settle at 15.
No. He said $43 million.
Yeah.
And, and I was like, look, it could be, right? In that market, you never know. You got to find the right buyer. My number was more along the lines of like 35 million, which at that case, everybody's still making money, right? It's still a very profitable deal. But he was like, nope. He was like, nope, it's going to sell for $43 million. Fast forward, year and a half later, sold for $36 million. So, look, still made a ton of money. Everybody came out, everybody, did well on it. But I always tell people it's be aware of your numbers, be aware of the exit, right? Be aware of what it's going to take and know also your thresholds to say, look, once it hits this point, that's it, I'm out. Yeah. Right? Is because, you can't get greedy about certain things because then you hold it too long and something happens and you never know.
Yeah. So that was, before he came to you, he was holding it for about 3 years.
I think he was into it for about 2.5, close to 3 years at that point.
And then once he actually partnered up with you, on the lending side, it was about a year later.
About a year of I think it was like 2 or 3 months left of finishing it, and then like 9 months of marketing, 9 months to a year of marketing the property to get it sold. Yeah.
Yeah, big numbers, man. Big numbers. Very exciting at the end of the day, just like hearing.
Those are exciting. Those are few and far between, Yeah. We do the, $300,000 deals all day long, the $500,000 deals all day long. And I get excited about those too,
Of course. Yeah. And at the end of the day, this is something really good for the listeners because at the end of the day, it's all numbers. And I used to be guilty of this as well, starting off over in Ohio, investing over there, because I tried for 2 years out here in San Diego, but I was going against real investors that did all cash, no contingencies, $50,000 hard right away. Stuff that we do now to be very competitive and get our offers accepted. But jumping into the lower markets, where prices, our cheapest property we purchased was $5,000, it's a big difference, right? So, and it's easier to wrap your head around, but once you get comfortable and you know your numbers and you got confidence in the process, then whether you're talking about a $5,000, property or a $5 million or $22 million property, it's like that ends up selling for 36, like it's all numbers. So just, knowing your numbers, being confident in them, and being realistic.
Knowing your numbers and also knowing your process, right? Like you said, it's because if you can duplicate something that you did on a $10,000 house, then you work your way up, right? And it's okay. That's part of the business.
It is. It's part of the process. I love that. That's so good. So let's talk about people that come to you that the deals don't work out. And then I want to hear about your rates, if you don't mind. But I want to, somebody that's brand new, doesn't know what the hell they're doing, or maybe you get that a lot, maybe not. But what have you seen over the years in your experience that are just learning curves that's like, hey, man, I want to work with you, but whatever, the numbers aren't working, maybe your documents anything that you could give, maybe a step-by-step or just learning curves in general that.
Yeah. So, we work with a lot of first-time investors. I got plugged into a couple of the real estate flipping schools, and they're teaching people to do it. So I'm one of the referral sources. So they refer, business out to us.
So you're very patient. You're very patient and kind because you're having a lot of people.
I think because I do have the ability to be able to walk some people through that, and I'm not just going to turn them away. I want to see people succeed, right? I mean, that's the ultimate goal in life is to build something, but not just for myself, but to be able to share that knowledge, with information with people. Because why not? There's plenty of properties out there, and we can all make money. And not only that, if I help somebody do well on the property, they're going to come back to us for more. Right. So to me, it makes more sense. Right.
I love where your heart's at. That's so smart.
Yeah. It does take some hand holding at times. Right. So, but yeah, what I tell people is, again, know your numbers, get things in writing. You'd be surprised how many people that come to me and they've said, look, I'm going to buy this house for 100,000. I'm going to put in 20 grand into it. And my ARV is 200,000. And I'm like, okay, well, it makes sense. How did you come up with that $20,000 number? Well, I just kind of ballparked it. Right. It's like, okay, right. It's find out. Get a bid from your contractor, know exactly what it is. Because I had a guy who was doing one, and within our 15-day escrow period, the contractor changed his bid 3 times.
Yeah.
And he's like, oh,
wrong contractor to use. Yeah.
He's like, oh, it's the cost of materials went up. And I'm like, not by $35,000. And
I'll cover the materials if needed. You just price me out on labor,
And it was like, know that, right? No, one of the biggest things too is that I always recommend it to people is if you are going to hire contractors and stuff, your pay structure to them. What kind of contract are you fronting them the money? Are they getting paid net 30? How is your pay structure with your contractors? Because, if you're smart, you can create a contract with your contractor where you're not paying them for, say 30 or 60 days after completion of the project. And if you do it right, you potentially already sold your property.
Oh, so yeah.
You never came out of pocket to pay your contractor.
Yeah, that's the best. That's very creative. I also, a tip that I famously give on a regular basis that helps a lot, especially if you're new, just getting started, paying your contractors with a credit card is going to save you in so many ways because it's like the mini court case without actually having to file the documents and go into court. God forbid if they don't do the work, run off with your money. It's not as agreed in the detailed scope of work. Make sure that you have this outlined and the before and after pictures pretty clear to dispute this and have them defend themselves as well. It gives them the opportunity, but they usually don't if they know that they're in the wrong and, will step up to the plate to make it right. So I encourage people to use those platforms as well. Byron, do you mind, spilling some of the details on some of the rates and what to expect when utilizing you guys? You already mentioned you can close quickly, which I love. I can appreciate, especially in a market like this, to be competitive when there's 20 plus offers on the table. You got to close quickly. So that's awesome that you guys do that. What type of rates can we anticipate? And this is nationwide, so it might switch up a little bit. Depends on
it does, and depends on the product, right? Like I'll tell you, we're doing, if you want to do like a long-term rental property, we're doing one right now in Miami, 4.99%, 30-year fixed, right? So, we have that. If you're also going super hard money bridge, I need to close in 3 or 4 days, 20% down, you're going to be in the 9s. Yep. Right. That's just kind of the reality of the market. Your typical fix and flip kind of for investors, we do base ourselves. Our pricing model is based a lot off of experience.
Yeah. Good.
Right. If this is your first one, your rate's going to be higher. If you've done, a lot, and what you're doing. When I say a lot, I mean, we're looking for 5 flips in the last 3 years is usually kind of the benchmark that we're looking for. If you've done that in the last 3 years, you're going to be, low to mid 7s for a fix and flip deal. If you don't have the experience, you're going to be in the mid to high 8s. So, it's kind of all over the place. There's a couple factors. Credit plays a little factor and not a huge factor for us. We're more collateral based, and the collateral's there, the experience, your exit strategy, your numbers, we'll take a little bit more of a risk on that.
Okay. So you judge more on the property base versus the person, but at the same time, you want to see experience. You do a personal guarantee with them.
If it's your first couple, yes, personal guarantee. If I have long-term clients that do 10 a year,
they're coming back.
We know they're coming back. We know, look, I mean, that our money's good as golden. It's good. It's going to turn around, and this is their business, and they're good at it.
Yeah, good. And then as far as points go, what does that typically look like?
Again, it depends on the pricing model. We're usually at about 1.5 to 2 points on every deal, depending on transaction, depending on down payments, depending on credit, depending on our risk analysis of you.
And then for credit wise, what does that look like? What are deal breakers that you're like, hey man, you got issues?
Honestly, not much.
Okay.
We do usually look for at least a 650 FICO score is kind of what our benchmark. Anything above 650, better. And I do have, we'll do some stuff that are below 650, but that's just risk-based, that's a higher risk situation. We'll do stuff that's NOD.
Yeah, there's additional taxes that come into play when you're a higher risk. Just know that, guys.
No, I mean, because we'll do stuff that people are in OD, and we'll do bailouts. We'll get them out of foreclosure to save these properties. So obviously, it's going to cost more money.
Yeah, and selfish plug here, but at the end of the day, I'm confident that we can help people on it. So if you guys are in a tough situation with your credit profile, you don't need to settle for the 650s or 500s. We can get you to the 800 club fairly quickly. So you can always reach out at creditrepairmobile.com to be able to inquire about that and see your situation and see how we can actually best suit you and boost up your score so you're less of a risk and position yourself better to the lenders. But Byron, man, I love this conversation. I'm excited where you are today. Where does the future, it sounds bright for you guys, but what do you have lined up? What kind of goals? Anything that me or the audience could do to give back to you?
Well, no, yeah, definitely. We're still building, this business, right? And to me, it's a labor of love and what we're put into it and what we're doing. But we do have some big things coming up. Now my turn to do my selfish plug a little bit. We just recently received SEC approval to create. Yeah, I know it's a big deal. It's a real big deal.
Yeah, congratulations, brother. That's awesome.
Yeah,
that's
appreciate
huge.
It. Our early first quarter next year, we're getting ready to launch our first actual JSS Capital Partners Fund. We're going out and raising $50 million to be able to lend out with some of the lending parameters that I've created for our clients. But not only that, but for acquisition, to go out and acquire. We're focused more on the commercial side acquisitions, big hospitalities, hotels, restaurants, shopping centers, warehouses, that more industrial type. That's what, but lots of long-term hold. But what excites me the most about that fund is, yes, it's a huge deal and it's a big opportunity for us to get into play with the big boys, if you will, a little bit.
Yeah. Next level, man. That's what it's about.
It is. But the thing that excites me the most about it is that our investment thresholds that we put in place are a lot lower than what a lot of these other private placement funds are out there. Most of them are looking for accredited investors. You have to have a net worth of $1 million, excluding your primary residence. So these funds a lot of times traditionally have been made for the wealthy, the people who have money to invest in this stuff, and then they just keep getting wealthier, right?
Yeah.
We've been able to apply for some exemptions to be able to lower those thresholds so that we can open the doors to a lot of the younger first-time investors, people who, say, hey, look, I've been saving up and I got 50 grand that I'd like to put in something. And I know it's not enough to go out and buy an apartment building or buy a storage warehouse or something to that nature, but I can invest with this fund and get, 12, 13, 14% annual return on my money, all the while being part of something bigger and being able to build this wealth where, like I said, traditionally, it's only been for the uber wealthy, right? People who can show on paper a net worth of at least $1 million, and that excludes a lot of people. So I'm excited to be able, because one of my passions is, the youth and the younger generation and being able to empower them and show them that there's an ability to make some money and set up some opportunities for some generational wealth that you can do without having to go out and be the guy who's flipping the properties, because maybe that's not your strong suit. Right. Without, necessarily just putting in a 401k, earn your, 4.5% interest on it, and you're not going to get anywhere. Right. So we're really, really excited about it. We're fully approved, and, we're working on some marketing stuff, and we're getting ready to launch early first quarter 2022. So we're really excited about that.
I love it, man. I love where your heart's at and just empowering, the younger generation, educating them, setting them up for success, really. And the average, middle class, right? To get to that next level. So There's a lot of power within that. So kudos to you, brother. I'm really excited for the hard work that you put in to this point to be where you're at today. And it's only sky's the limit. It's really coming up. A lot of growth for you guys. So very, very exciting. We're going to have you back in the future to see what the update is. But for anybody out there that wants to connect more with you, and I apologize, I don't actually think we actually covered like the name of the company in case they want to reach out. But how can people actually get a hold of you, the company, your resources in general?
Perfect. Yeah. So my company is called JSS Financial. So they can reach us online at www.jssfinancial.net, on all the social media platforms at JSS Financial. Me as an individual for coaching, mentoring, speaking, investments, anything that we do, I'm at byronenriquez.com or on the socials at the Casual Executive.
Let's go. I love it. Well, I appreciate you so much, Byron, for diving in, taking an hour out of your day to be able to give back to the listeners. I love where your heart's at and where you're going. So appreciate you for really showing, what it was like to be the investor to now being the bank and helping out so many investors in the process. So guys, I encourage you above and beyond, reach out to this gentleman, connect with him, use him as a resource and grow your business, partnering up with Byron. With that being said, if you guys want to connect with me, you can always do so on social media platforms like Instagram. It's Brandon Elliott Investments. Otherwise, Facebook.com/Brandon Elliott Investor. If you need any credit repair done services for you, you can always reach out at creditrepairmobile.com. Otherwise, if you're looking to get educated, how the banks and lenders are judging you, how to fix your own credit very quickly. I'm talking hours up to 10 business days. Even bankruptcies in some cases in less than 30 days, legitimate stuff that should be on there, wiping it off. And then being able to build up credit, personal, get you up to the 800 club so you qualify for everything, get the best rates, doing mass applies, getting 20, 30 credit cards at once, and several 100,000 in credit lines, business credit up to $1 million in a year, and then being able to leverage it, putting it to work. Then you can always check out Credit Counsel Elite, creditcounselelite.com. That's our mastermind group, our education, our platform, and would love to see if it's a good fit for you guys. So with that being said, Byron, you are the man. I appreciate you, brother, so much. And we will tune in and see you guys on the very next episode. God bless.
Thank you.
This has been another episode of Ready, Set, Go Real Estate Investing Podcast, brought to you by Brandon Elliott. For more information, please visit BrandonElliottInvestments.com. Also, please don't forget to like, share, and leave a comment below. Thanks again for joining. Until next time, God bless.